The Canadian economy lost more than 40,000 jobs in July. That was a month many expected to see a small gain. Let's bring in Dominique Lapointe from Manulife Investment Management to talk some more about this. Thanks for your time.
Good afternoon.
So June was an 83,000 job gain, which you referred to at the time, I believe, as a fluke. In your opinion, was today's report more in line what you were expecting?
Yes, I'm not too focused on the negative print per se, as a percentage it's not that large, but I think we're back to the trend for the Canadian economy, which is very weak job creation, if not negative in some sectors. And what's more worrisome about this morning's report was that you saw weaknesses in services-related industries. So not only sectors that are impacted by tariffs, but now you're looking at weaknesses in finance, insurance, and also media and culture.
In fact, the manufacturing was up a little. So I'm wondering how you square tariffs with what we're seeing going on.
Yeah, so through the months, we've come to realize that with the USMCA exemption from the U.S. administration, most of Canadian exports to the U.S. are not tariffed. So after the initial shock, after the initial uncertainty on many of those sectors, we're not surprised to see some stabilization in manufacturing jobs. So that's 1 month. If we get more than 1 month on that front, then maybe we're going to get more positive. But I wouldn't make too much of it, especially since it follows many months of declines.
Okay, we saw losses in culture, recreation, information. Can you sort of describe what kinds of jobs those would be?
So those would be media job, or you'd have people working in the culture industry, so anything related to sports or entertainment. It's a smaller industry, and it's worth also reminding that that industry as went through, depending on the subsector, went through consolidation over the years. So for this one in particular, what we see is a structural downtrend in some cases.
So we are also seeing younger adults struggling. The younger age group, they are really having a difficult time finding a job, and their unemployment rate is more than double what it is across the board for Canadians in general. Why is that?
Yes, and that's very concerning. So we're looking at a 15% unemployment rate for young people. That's the highest, I think, since 2010, and it's even higher for young men, actually. That's the normal kind of behavior you see from the labor market when you undergo an economic slowdown, right? So usually the first people who have a harder time finding a job when there are fewer jobs out there is people with little experience. So you have that age category. And I also want to point out that the unemployment rate for recent immigrants, so 5 years and less being in the country, also moved up this morning. It's now 11%. So those are the two places that we would expect to see higher unemployment rate when there are fewer opportunities, and that is the case right now in Canada.
Okay, so based on what we're seeing right now, that beginning of the softness, if you will, would you expect that trend to continue? Do you expect to see that softness widen out even more August, September?
So there's the positive news, and the positive news would be that we have more certainty at the global level on where U.S. tariffs are. So we sort of ruled out a big, significant recession. Now for Canada, there's still a lot of uncertainty out there. Plus, you need to factor in that interest rates have come down, but for many people, they're still high. And they're also interest rate that companies have to pay. So we don't expect the pace of hiring to pick up over the next couple of months. The unemployment rate on one hand is going to probably not increase too much because, as you saw this morning, there are fewer people looking for a job, and the pace of population growth has declined a little bit this year because of the changes from the federal government made to some programs. So a slow grind up in the unemployment rate with little hiring. And at the same time, what we noticed that is another issue is that once you lose your job, it takes you more time to find a new one.
Let's talk about the lending rate, because the Bank of Canada will not have another announcement until mid-September. I know they'll get a lot more information before that point, but are you in the camp that's supporting more of a chance of a rate cut for September, given what we've seen today?
No, I think we're still far from that. if you consider, say, June versus July, those jobs report, they sort of net out and we come back to a weak trend for the labor market. We think that the Bank of Canada needs two things to cut. The first is weaker growth than they actually forecast. So they already think that this weakness will come. But they were comfortable with the rates where they were when they made their last decision. So unfortunately, we need to see more weakness say on the GDP front. The second thing is that inflation has been somewhat problematic over the past couple of months. If you strip out shelter, the core measures have rebounded. So we need to see some reversal there, where we have evidence that all this slack in the economy offset some of those upside pressure that we've had on prices. And then at this point, they're going to be in a position where they can cut. So for us, at the earliest, they would cut in October, if not December, but we still think that there will be two more cuts from then between now and, say, March 2026.
Got it. All right. Dominique Lapointe is the Senior Director of Macro Strategy at Manulife Investment Management. Thanks for your time.